Hi guys, welcome to the Coin Blog channel, where you can learn about all the most important events of the past 24 hours in the crypto world. We'll discuss today the future of Bitcoin. Could a new correction come? Bitcoin has enjoyed a recovery to $44,000 and has stalled in the resistance zone, which puts further growth in question. But in addition to the current factors that affect the price right now, there are some fundamental things that are starting to develop. We are talking about the looming cryptocurrency regulation in the US, where the SEC is going to hit the major stablecoins USDT and USDC, as announced by Gary Gensler. Also, the SEC has gained some traction in court against Ripple, parsing the latest news regarding XRP. Separately, we look at how the Fed's decision to keep zero interest rates and printing dollars has affected the S&P 500 and how it has affected BTC. And they made some very interesting statements, which will affect Bitcoin in the nearest future and might lead to a significant correction. Anyone who has been in cryptocurrency for at least 6 months must have heard the theory that Bitcoin's rise is just one big bubble being inflated in stackable coins, and the main evil here is Tether. It used to be virtually the only stablecoin, and such accusations have been made since about 2017 at least. Today, stablecoins have become one of the main trends of the crypto market, with Tether and USDC in the top 10 by capitalization now, with volumes of $68 billion and $30 billion, respectively. The official reason for the creation of stablecoins sounds like this: Bitcoin and cryptocurrencies have high volatility, and such coins allow you to save your money and sleep well, because their price is stable. The real reason of stablecoins' appearance is somewhat different. It is rather problematic for crypto exchanges to get permission to accept and trade in fiat currencies, but to add new trading pair, for example USDT to Bitcoin, there is no need to ask permission from anyone. Plus, stablecoin transactions go through blockchain, that is, past the traditional payment system, which is also very convenient for many. And it is this part of the cryptocurrency world that the SEC is now targeting. The first blow in this direction came recently when the SEC threatened to sue the cryptocurrency exchange Coinbase if they launched a USDC stablecoin deposit feature at 4%. That ended with Coinbase deciding not to fight and putting their project on pause. And after a recent statement from SEC head Gary Gensler, it's clear that the attack on Coinbase was not an accident, but just part of a larger plan. Here are his words. Stablecoins work like poker chips in casinos in the Wild West. There are a lot of warning signs. We have to be proactive. He also added that he's not going to chop off the shoulder so that platforms and their customers who are already using these services don't get in trouble. It's very good that the SEC is not going to cut corners and just ban all stablecoins and any use of them, otherwise exchanges would have delisted them immediately, trading volumes would have fallen and the cryptocurrency market would have followed. But using Coinbase as an example, we can see that the launch of new products will be limited. There will soon be questions about the issuers of stablecoins and their collateral, and then we can expect the licensing of these activities. In general, it's not fatal, but to print more USDT to pump on Bitcoin or at least to buy back the fall is unlikely now. Regulators turned a blind eye to stablecoin for a long time, but all good things come to an end sometime. Right now XRP price doesn't depend much on news about Ripple. You can see it for yourself by looking at Bitcoin price since mid-April for example. And here's the XRP price from the same moment. The similarity in the graphs is obvious, and they had some good court wins. Which, by the way, has recently been replaced by a series of defeats. Let's break them down in more detail. The court ordered Ripple to turn over data from meetings within the company. We're talking about recordings and transcripts. The SEC attorneys probably want to find indications in these documents that Ripple knew about a potential securities law violation but ignored the fact. There may also be evidence that the company influenced the market price of XRP. There was also evidence of Ripple's reliance on XRP sales to support its business, and indirectly, Ripple CEO Brad Garlinghouse had already said that if it wasn't for XRP sales, business would have been a lot worse. But then, apparently, he was told that there was no need to say that, and now the official version is that XRP is just a payment services business. Another defeat came to Ripple 2 days ago when the SEC was allowed by a court not to disclose the transactions of its employees with Bitcoin, Ethereum, and XRP. Ripple could have used this information to prove that the SEC themselves do not define XRP as a security, but something seems to have gone wrong and the court decided that this option was inappropriate. And in other important news, while we are watching the standoff, Ripple and the SEC have mutually agreed to withhold some of the information in the case. Who won and who lost here? Our opinion is that you and I lost, because if the information is withheld, therefore, it could hurt the positions of both parties at once. Assuming that the SEC will sue other cryptocurrencies, this information can no longer become part of the case law. By the way, there were rumors on the web that if the parties were able to agree on a number of issues, then maybe the case itself will be settled. But the day before this news, the media reported that Ripple does not intend to compromise. Personally, the fact that Coinbase conceded to the SEC without any court action is troubling to us. It may indicate that the regulator has strong arguments. Consequently, we may severely underestimate the SEC's position against Ripple, and if they lose the trial, many cryptocurrencies' heads may fly next. But it won't be a quick process, and it may not be over until next year. Until then, XRP will continue to follow Bitcoin. The stock market took a U-turn yesterday because the Fed promised to keep printing $120 billion every month and buy back assets from the market that no one else wants to take. But Jerome Powell also made some big announcements that don't bode well for the stock market in the long run, and as you know, that could have a momentary impact on Bitcoin as well. The ending of the stimulus hasn't started yet, but we already know the approximate date, which is November 3rd. Because as Powell said, most likely at the next meeting we will announce the reduction of the volume of purchases from the market. If the S&P 500 was down 5% in anticipation of such an announcement, what happens when it comes? That said, the market often reacts in advance to forthcoming events, so it is logical to expect high volatility before the date, which may affect other markets. Everything is planned to be done gradually. The quantitative easing will stop approximately in the middle of 2022, but much more importantly, when the Fed will start to raise the key rate. While the process has been postponed until 2023, Powell says inflation will continue to rise and the vote indicates the Fed will abandon zero rates by the end of 2022. In this chart you can see the Fed's key rate decisions over the past 5 years. The rate hike after the 2008 crisis then did not begin until 2016, with its most active periods coming in early and late 2018. Just then, there were notable corrections in the S&P 500 in January 2018 and from September to December 2018. And if you look at the chart of Bitcoin itself, a bear market began in the winter of 2018, and the fall of that same year saw the final capitulation with a drop to $3,200. This information can be seen as a good thing, saying we still have a full year before the rate hike begins. However, it could follow a different scenario if the stock market reacts strongly to the start of the unwinding of the printing press and then gets hit with a rate hike. This is unlikely to lead to a new financial crisis, for the Fed would not allow that to happen. But even a strong correction in the S&P 500 is enough for Bitcoin to fall, and here the risks and occasions are getting bigger. So when you do your cryptocurrency strategy, don't forget to look at the rest of the markets. Thank you for watching us. Don't forget to subscribe and click the bell not to miss the most actual and interesting things in the cryptocurrency market.